On today's hot sheet, I'm discussing the latest inflation report from the end of last week, this week's housing inventory data, and pending home sales. Today is Tuesday, September 2, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Naples, Florida. Welcome into the hot sheet here as we begin the end of summer. Summer is over. We begin, I know fall's not really for a few weeks, but it's fall. You get post Labor Day. It's serious times. There's going to be a window between now and the holidays where there's going to be a lot of serious decisions made. Your local community, people are going to be making serious decisions about their future. Serious decisions about what they're doing with their real estate, buying, selling, investing, all of that. Serious decisions from the greater economic. We've got obviously a FOMC decision looming in just a couple of weeks, 2.5 weeks. We're going to have a Fed meeting. We're going to have a decision on rates. Congress comes back from their vacation back to DC today. So a lot of things are going to start to get serious again. Summer's over. Serious times are here. September, October, beginning of November, until everybody goes on that little holiday retreat at the end of the year again, are upon us. That tells me there's just more opportunities, more people that are going to be paying attention over the next 60, 75 days, having sharper information. Okay. Being sharp is super attractive when you're talking to customers. And I'm not talking about how you look. I'm talking about the information that you provide. Okay. Appreciate everybody who's in the BAMX role play this morning. We sharpened our skills on those conversations that we're having every single day with customers, turning them into clients. If you want to get access, obviously, to those Tuesday morning sessions that we do before the hot sheet each and every single week, just jump into bamxschool.com/BAMX. All right. To wrap up the end of the week last week, before we get into inventory, which we hit the beginning of the week every week here on the hot sheet, we're going to take a look at the PCE. PCE came out at the end of the week last week. It's the inflation gauge that the Fed prefers. So the Fed looks at the PCE with a little bit of a stronger viewpoint than what they look at the CPI, for example. CPI, market reacts to quite a bit. PCE, the Fed reacts to a little bit more. So the U.S. Bureau of Economic Analysis, BEA, put out their numbers for personal income as well as the PCE, okay, inflation. So personal income, will start there, rose $112 billion. It was a 0.4% rise in July. Disposable personal income increased also 0.4% to $93.9 billion. Then PCE, this inflation gauge, personal consumption expenditures climbed $108 billion, 0.5%. Now the PCE price index, which is the index that the Fed looks at and uses in their decision making, as they will be making a decision in 2.5 weeks, rose 0.2% from June. Core PCE price index rose 0.3% from June. PCE price index rose 2.6% year over year. Remember, we're looking for this New Zealand set number, this arbitrary number of 2% inflation. I say New Zealand set because this number was kind of just pulled out of thin air by somebody in New Zealand, I'm sure, with some kind of studies decades ago. Are we really living in those times today where 2% inflation makes sense versus, say, 3%, or what we're running at right now, which would be 2.6%? But the Fed has this goal of 2%, and they're looking at PCE, still up 2.6% year over year. Core PCE, 2.9% year over year. That core PCE was a little bit higher than expected. It's under 3. It's at 2.9, but it's not at the 2%, which the Fed wants to see all inflation metrics kind of hitting this perfect number of 2%. Private wages and salaries increased $77.5 billion. Services producing industries was plus $77.4 billion. Government wages and salaries increased 5.1 billion, and the compensation estimates updated with revised BLS employment hours earnings. These were all computed here from April through June. As you see here, the personal income, outlays and savings, not much of a change here over time. According to this analysis, changes in monthly consumer spending for July. You had motor vehicles and parts making up the vast majority, along with financial services and insurance. And gasoline and other energy goods was down 12.1 billion, as well as food services and accommodations. Remember, gas and other energy were kind of perceived as being some of those issues going into tariffs. Oh, well, gas is going to take off, and gas actually hasn't. We haven't seen inflation on gas and energy. It's actually gone the other way. And so now the focus shifts to other areas. All right. So PCE increasing to 0.2%. Again, not a huge number, but a little bit more than where they wanted to be. Now, talking about not so huge numbers, let's shift over to housing inventory. Okay. Housing inventory, we've been tracking every single week, the beginning of the week here on the hot sheet for the last 3+ years during this real estate recession that we've had. Okay. So inventory last week actually declined again, really moving sideways, moving flat, because on a national scale, this number is not that big. It's not big enough really to call it a true decline. But it did move down just a tick, 861,000 plus to 860,700. So about 500 single family homes down on active inventory. Now, we've got a week here going into a holiday, and then we're going to have a week that overlaps the holiday. So some of these numbers are going to get skewed by that. I'm really more interested in where inventory goes the second half, the last 3 weeks of September. If you remember last year in September, we were continuing to move up. Those last 3 weeks, we went from 713,000 up to 725,000, up to 731,000. And those were big jumps. And they're much bigger than what we've been experiencing here in the month of August. For example, the first week of August, we started at 865,000 on active single family homes. Well, we've now ended at 860, down 5,000 on inventory in just the last month. So the accumulation of inventory that we were experiencing during the spring and late spring not only has decelerated, it's actually just gone down here in August. If we look at August of last year, we started at 683,000, so far less homes than we have active on the market today. But the acceleration increase of inventory last August was much more prominent than it is this August. We ended August at 704,000. So we added in August of last year. This year, we lose active inventory throughout the month of August. Does that trend continue in September, when historically you would expect September to continue to peak out before the seasonal decline of the last 3 months of the year, October, November, and December, as it relates to active inventory? We're up 22% year over year. At one point during the spring, we were well up over 30% on that year over year mark on active inventory. New listings for the past week went to 63,000, almost 64,000. Same week compared to last year, it was 59,000. So new listings continuing to take this, this seasonal decline off of the peak season, which comes late spring, early summer. Now new listings showing that decline, and they will drop off a cliff as we get later into the year, as they always do. So the opportunities for new listings entering to the market every day gets smaller. I'd argue that means, hey, listings are coming off the market. And we had this discussion this morning in the BAMX role play. I'd argue that there are some opportunities for those that aggressively attack that sector. But new listings coming onto the market is going to decelerate. And the only question for an agent is your name going to be on those listings? that do come onto the market. The percent of properties with recent price reductions stays at 42%, moving up from 39% same time last year. So the properties on the market are reducing at a much higher rate than they were last year. If we take a look at where we're at on pending sales, Altos Research has total pending sales almost a full 10,000, 11,000 above last year, 376,000 versus the 365,000 on pending home sales. So following the trend line of the last couple of years, very low existing home sales, but pending home sales doing better than where we were last year. Obviously, cancellations in the summer, as we saw, also hit the highest level. So just because they're pending doesn't mean that they get into closed status. The weekly pending number was also better than this time last year, 65,700 for the week, hitting fresh new 30-year fixed rate lows last week. Might have been a help there. We have a jobs week coming up, which we'll be watching for, and particularly we'll be watching for as it relates to the rates. Looking at the rates here, just a recap of where we're at year to date: 16 positive readings, 11 negative readings, 6 flat prints, 30 straight weeks of positive year-over-year data for mortgage applications, 17 consecutive weeks of double-digit growth year-over-year. Okay, so that's where we're at heading into the week. And if we look at the last week, or kind of where we're starting this week from a 10-year Treasury perspective, starting the week at 4.275. And this has moved up a little bit from the weekend, from the end of last week. You had a couple things going on with the trade deals. Some of these trade deals are being stopped by one of the lower courts, one of the federal courts. That'll go to the Supreme Court, obviously, and get shaken out there. But that's a disturbance to the market, as the market had factored in trade deals. Now some of them in concern. They're all in effect right now until obviously the final court ruling happens. 4.273 on the 10-year. And you had that PCE report, obviously, that we covered there. The 30-year fixed, as mentioned, came in at fresh year-to-date lows to end the week. Back-to-back days at 6.5. Those are 10 plus month lows, and those are also year-to-date lows at 6.5. And there'll be some information like the jobs data later this week, as well as Congress getting back in, and just, what's going to shake out here this week. That'll have implications on these rates. We'll be looking to see what the Fed does if they hold through with that Jackson Hole whisper of cutting rates when they meet and make their decision in 15 days. CME Group has the ease of a 25 basis point cut happening at 89.7% chance. Poly Market has it at an 83% chance, a 4% chance actually, of a 50 basis point cut. So kind of in line at the totality of 87 with the 89%, near 90% chance of CME Group of seeing a cut. Pending home sales also are ultimately in the future will also be impacted by some of these rate decisions and where rates head here over the last 4 months of the year. NAR is reporting that pending home sales are showing a 0.4% decrease in July. So June over July, 0.4% decrease. Declines in the Midwest and Northeast happened while the South was essentially flat, and you had gains in the West. 0.7% increase year over year in pending home sales. So NAR data very much in line, I would say, with Altos research. Altos research showing a slight increase in year-over-year pending home sales, and now NAR's data, which came out late last week, showing the same. If we break down the U.S. pending home sales situation off of the index, which would be a level of 100, would be activity relative to 2001. Just think about all the changes in life since 2001. Okay. How much faster everything moves, how much faster we receive information, how many more people are living in your community? How many more people are home buyer age ready? All of those factors since 2001. Okay. All those changes that have happened. Yet if 2001's activity was a scale of 100, our current activity right now is a 71.7. That if you can really think back to 2001, that should bring huge perspective to how depressed the transaction market is that we're dealing with right now. Lawrence Yun, chief economist, says even with modest improvements in mortgage rates, housing affordability, and inventory, buyers still remain hesitant. And I would argue that sellers also remain hesitant. It's why we're not seeing, August. We've expected inventory to continue to follow the pattern of this market. But you know what? Ultimately, sellers will hold the property off the market if they feel that's the best solution. And there's not a lot that are in a position that they have to sell. The Northeast index is at a 64.3, while the West is at a 56.3. Those are the two low regions there. Activity relative to 2001, very suppressed. The Midwest comes in at a 70.2. All Midwest was down 4% month over month. That's the biggest drop. Northeast was only down 0.6%. The South, which is essentially flat month over month, comes in at the highest index at an 86.1 on pending home sales. So NAR's data here on pending home sales showing that there is still a huge hill to climb as we get back to a normal market. We're starting to get back to normal inventory. Okay, we're starting to, a lot of markets are saying, hey, we're pretty much where we're at pre-pandemic, or maybe even above in some of the Sunbelt states, or we're inching closer to that. But just because inventory is there doesn't mean the transactions are there. Still need work to go on the rates. The rates can be the biggest short-term fix to this real estate market. Real estate's been in a depression or recession rather for 3+ years. It's all been rate related. And when real estate comes back, it's going to be rate related once again. When I say come back, I'm talking from the transaction perspective. All right. There's your hot sheet here to start the week. Brought to you by each and every single week. Brought to you this hot sheet. We get to do this show every single day. Can you believe it? It's part of the BAM mentality. Give everything away for free. And we're able to do that because of our partners at Zudilio, who actually partner with our BAM X members in giving them a platform to compete with that meme maniac stock Opendoor. Okay. They partner with agents. They don't want to kill real estate agents off of their deals like Opendoor was. Keith Raboy, co-founder of Opendoor, says, hey, we need to kill agent partnerships, not support them. Well, Zudilio does the opposite, and they've done the opposite for years. And it's why Opendoor is actually trying to copy what Zudilio is doing and has done already for so long in the market. All BAMX members get Zudilio as a benefit to being a BAMX member. This is a $200 a month platform. You get it included in your $97 a month deal over here at BAMX. So you get free access to Zudilio's cash offer platform, which is a $2,400 annual value. Just jump into the BAMX members, just jump into the Zudilio classroom, get access to it there. Each and every single day I deliver inside of BAMX, and we're now in September here. All of the slides that I use right here on this show each and every single day. So as well as my notes, all of that is uploaded. Just go to school.com/BAMX. Okay. There's your hot sheet here for today. Be looking forward to seeing you guys back here tomorrow, 9:30 on the East, 6:30 on the West. Until then, toodaloo.